the stock market actually tried to bottom today, but it failed the first time around. We were dragged down by the more powerful bond market. For a late-day bounce, erased a big chunk of those losses. Dow only sinking 357 points, S&P falling 0.82%. But more importantly, I think NASDAQ actually managed to advance a basis point, a stunning comeback. But let's not get too carried away. It was still the worst week for the averages since the financial crisis. Now, you got to understand the bond market is bigger than the stock market. We don't talk about it because it's boring. But it is very important to the direction of your portfolio. Everything's wrapped up in bond yields. Always has been. I learned that 40 years ago. There are multi-billion-dollar programs right now that sell stocks whenever those yields go down. It's formulaic. And they buy stocks whenever the yields go up. And today, those yields went down hard. Benchmark 10-year Treasury got as low as 1.12% late today. We're closing at just 1.16. See, that's a record low level, signaling that the economy is growing weaker, and there's a real fight to quality as investors hide their money in fixed income coronavirus supply chain. In other words, the bond market's screaming that the coronavirus is far worse than most people realize. Global commerce will take a real hit, and it might even be something similar to 2008 when all hell broke loose. Now, I can't tell you whether the bond market's right. I'm not an epidemiologist, but I know the market. So let me give you the game plan for next week. Given how this outbreak has played out, it's very likely that there'll be more cases come Monday. There'll be a lot of bad news. It'll be the headlines. I know that. It doesn't matter. It may not affect the stock market as much as you think. But you know what? It could affect the bond yields. We got to watch. If that's the case, the stock market will indeed get dragged down again on Monday. However, that could finally set us up for a snapback rally on Super Tuesday if Joe Biden, liked by the stock market, does better than expected the 15 primaries and caucuses that happened that day. It's looking like Biden could run away with the South Carolina primary tomorrow, and it may give him a little momentum. He needs to turn things around on Super Tuesday. But remember, as far as Wall Street's concerned, anything that keeps Bernie Sanders away from the nomination is good news. And no, Wall Street does not feel that if Sanders gets it, it's a shoo-in for Trump. They just feel like if Sanders gets it, it's dangerous, okay? So if we get an all-encompassing down day on Monday with more coronavirus clusters, more sick people, maybe a world leader or a celebrity getting sick, that might get us to the point where the market's totally oversold, even more than it is now. And that would create some buying opportunities that are a little more lasting. If you don't have any cash on the sidelines, stay tuned. I'll tell you exactly what's still worth selling, and there are, particularly after today's bounce, at some levels to raise capital.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.